Hi, this is Alkemy with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 15th of December. Starting off with the FTSE 100, which is not looking quite as Christmassy as perhaps we would have liked it to do. We've still got rising 50 and 200-day lines, so the overall picture is strong while we're above that 50-day line at 82.30. There's an uptrend line there from the beginning of last month, running through around 82.70. Above that, we're hoping for a breakout through 8400, and then maybe by the end of next month, up to 8600 plus at the top of that 1 year rising trend channel. On the downside, the worst case at the moment, I suppose, is the 200-day line, 8170, but that would be rather rude at this time of the year. RSI still above neutral 50 at 54, which is a positive. Next up is the DAX, which has had a rather better December than the FTSE, and here backing off the best levels, the intraday high there, the record level, but still looking for up to 20,800 by the end of this month, while we hold above the floor of the latest consolidation around 20,200. Worst case scenario is that we've got to bounce off 20,000 and the old gap there at the beginning of the month to then reach up to 20,800 over the next couple of weeks. Onto the Dow, where it's disappointed again with several consecutive days to the downside. It looks like it's about 7 of those, which is rather painful. We've got the 50-day line there as the notional support now, 43,300. Worst cases, we've got to test down to 43,000, the floor of that rising trend channel from August. The RSI now below neutral 50 at 40, well, just under 47. So the minimum here really is an end-of-day close back above 44,000, Friday's resistance zone, to get us back on track for the top of the channel, currently at 45,400. Hopefully that could happen by early in the new year. Moving along to the situation at Bitcoin, which has not let us down compared to the other markets. Here, we've got this sort of rising flag formation and testing the record highs that we had earlier in the month. The trend line there at from April at 104,000, end of day close above 104,000, and we could be looking at 120,000, which is the upper parallel of that resistance line there from back in April. We're looking for 120 while we're above the 100,000 area. Worst case is we've got to test the uptrend line there from November one more time. That's currently near 96,000, but still looking very strong indeed, especially given the rises that we've had since the beginning of October. Moving on to gold, and here it's been a bit volatile in the sense we had a bull trap through the mid-November resistance there near 2750. While we're below 2750, we've got the risk of a move down to the floor of that rising trend channel from back in February. That's around 2630 at the moment. And given the gap close sell signal that we had a gap higher there, and the weekly close below the 50-day line, looking rather vulnerable for a move down towards the 2600 area. RSI is also fallen below neutral 50, so 2630 probably the best we can get away with, and then maybe as low as 2600 in the floor of that channel to grapple with. Moving on to the stocks, and starting with Alkemy, which almost on the quiet has delivered a decent push to new highs for 2024 at least. We had the second target there, or third target I suppose, given the break of the resistance line back in October, but second main target there around £1.26. Above that, looking for as high as £1.95, the upper parallel of that broadening triangle from back at the beginning of the year. That resistance line projection there from September 2023, and hopefully we could hit that by the end of next month. The implication, obviously, is that the company is going to get its long sought after funding. Aptamer is next, and here the position is that we've managed to clear our initial rising trend channel base target at 0.37 2 days in a row, and are looking now for a move up to 0.54, the upper parallel of that rising trend channel base, and hoping for that by the end of next month or even sooner. The big barrier, I suppose, though, is 0.46, which is the 200-day moving average, and if you look back, it's difficult to find a time when we were actually back above it. I don't think we've been back above that 200-day line since, well, basically for 3 years, so quite a change there on Aptamer. Suggests that the company's doing something right, especially after 3 unfilled gaps to the upside, both in November and December. That suggests that there is a major re-rate going on with significant interest on the buy side. Also had a buy signal in terms of the RSI, bounce off RSI 50 at the beginning of this month, which accompanied that last gap. So looking very strong indeed, especially while we remain above 0.35, the old November resistance. Moving on to a company which just loves saying no to Mike Ashley. I'm not quite sure why, but so far, at least with all the intention on the company, the shares have bounced and they've broken the main falling trend channel there at 33 pence. We've had a test of that as new support and a break of recent resistance, post-July resistance. 36 pence, above 36, looking for 44 pence, hopefully by the end of this month or even sooner, and perhaps actually looking for much more than that, especially given the way that now both the 50 and 200-day lines are rising. That suggests that we're in a run up to a golden cross, and the golden cross tends to be the strongest part in the cycle. In fact, it might not be wrong to be looking for even greater target than 44. If you found the shares and looking for recovery, then 52 pence by the end of next month could be a best case scenario target, while we're above 36 pence. A lot of stocks to choose from today, and one of them is Castillo, and here another stock which has had multiple unfilled gaps to the upside, so a major change in sentiment, major re-rate there. That's what those gaps mean, or tend to mean. We've hit our second target there at 0.81, above that, looking for as much as 1.6 pence by the end of next month. Punchy call, but it's a very punchy chart. You can see that there have been no red candles there since the 24th of September, 24th of October rather. So that is quite an achievement. Very, very strong situation there, especially while we're on the right side of 0.8 pence. Onto a company where I hosted a webinar during the week, and here looks as though some of the webinar effect might have worked here on European green transition. We've had a bear trap rebound from below 8.5 pence. Above that, we're looking for the shares to fill the gap up to 11 pence, hopefully by the end of this month. Best case scenarios, we're up to back up to 12 or 13 pence by the end of next month, especially if we can hold that 50-day line on an end-of-day close basis, as we did both on Thursday and Friday. This stage only well back below the old November support there at 8.5, really questioning the recovery scenario. Moving on to GSTechnologies, another stock which has gapped up very nicely. The main one was back in October. Unfilled gap to the upside. We've had a gap fill in November and a bounce there, but for December, unfilled gap to new highs, and just missing our third target there at 2 pence, and looking for an extra leg up, which would be the spring 2023 resistance line projection at 2 pence, hopefully well before the end of this month, and especially while we remain above 1.6 pence, the old November resistance. Global Petroleum always followed stock these days, and here a nice consolidation above the rising 50-day line. That suggests that this is a mid-move consolidation, effectively a bull flag, and we're looking for the top of that channel there from back in May, as high as 0.5 pence to be hit by the end of next month, while we remain above that rising 50-day line at 0.23. Guardian is next, and here one of the big success stories of the year. You can see the share started running almost on the get-go for 2024. The speculation always that the company will eventually deliver on its government grants from the US, which I'm sure it fully deserves given all the activities it's doing. Above that 50-day line, though, on a technical basis, at 27.5 pence, we're looking for up to 44 pence at the top of that channel, and hopefully some funding news would do the trick. But a bear trap gap reversal there in November already told us that there was some keen buying in the shares. Moving along to stock which has been mentioned on Twitter as a potential turnaround situation, Graft Polymer, and here nudging the 200-day moving average for the end of the week. That's around 0.24, above 0.24 again on an end-of-day close basis, or above the 200-day line, at least looking for 0.35. And that could happen as soon as the end of this month, given that we spent a long time shuffling above a rising 50-day line. And we've also had two rebounds for the shares, or at least the RSI indicator there, off neutral 50. That's a double signal on the buy side, and hence the confidence in 0.35 being hit sooner rather than later. Onto a stock which I don't think many people follow, but it is here now. We've got Huddled with a wide rising trend channel there from this time last year. Top of the channel there at 4 3/4 pence. Looking for that as soon as the end of this month on the basis that we've got the 50 and 200-day lines both rising. The RSI is pushed well above neutral 50, and support has been found on the last dip above the floor of the channel there, around 2.89 pence. Ideally, we head up to 4 pence plus while we're above the rising 50-day line at 3.1 pence. On to the market that everyone loves so dearly, which is the Aquis Exchange, and one of its better contenders at the moment is IntelliAM, and here, rising off the back of news this week, I believe, from memory anyway, the 50-day line there at 78 pence, and decent end-of-week close above that. The longer we stay above 78 pence and that 50-day line, the greater the chance of a move up to £1.15, perhaps as soon as the end of next month. Ideally, we stay above that initial December blip there at 72 pence while we get to £1.15 and basically go back to the highs of the summer when the company listed. Kazera has been a steady pair of hands in the recent past, and Friday saw a decent jump, unfilled gap to the upside, the second one in the recent past. The first one was back in August, and then we had the golden cross in September, so the shares have delivered on their technical promise. Top of the channel there up to 2 pence, and we're looking for that by the end of next month while we remain above recent resistance at 1.3 pence. One of the stars of the year, and if you look at it, I think at the moment is the top riser since the beginning of the year, is mobile streams, and it just shows what happens to a stock when there is no dilutive funding. The shares go absolutely berserk, and that's what's happened here. Vertical rise in August and September, and looks like we're going to have a new leg to the upside. Fundraisers permitting, obviously. Right top of the channel there, 0.58 pence. Looking for that maybe by the end of February. Well, it could be by the end of January. It should be by the end of January, given the ricochet off the rising 50-day line and the floor of that channel that we've just had in the last week. I think if you look closely, you can see some decent hammer candles there in the recent past. And in fact, we haven't had any red candles during December to date. So very strong look there. And Friday's shares, the shares opened at the low, closed at the high, which is another positive after the multiple bounces of the RSI at and above neutral 50. Onto a stock which has not been treated very kindly, I would say, which is Phoenix Copper, but there was a glimmer of hope on Friday where the shares went down below 3 pence, but they managed to close basically at the old November support. So it looks as though there's been a bit of a cork in water rebound, bit of an overshoot there, overly negative within that falling trend channel from back in September. Top of the channel there is at 6 3/4, and maybe we'll get to that. Obviously, funding news permitting, but also just on the basis that it looks as though there may have been an overshoot to the downside. Early and end of day close now back below, well, really well below 4 pence, really suggests that another leg down is due, but I think the bears have had their day there. Speaking of bears having their day, as soon as the company announces it's leaving the stock market, the shares go through the roof, or at least that's been the story here at Proton. Massive gap close buy signal at the end of the week above 0.43, and above 0.43 shares could still squeeze up towards the 1 penny area before their day is done, or their time is done on the London market. Interesting to see that the stock even managed to close well above the 50-day moving average. The stop loss here, though, is basically that we have to see the shares remain above the top of that November gap there at 0.43. On to the last two. The first one is Petrel, and here you can see that we've hit our first target there quite hard at 1.6 pence. Above 1.6 pence, if we ever get back there again, then we're looking at up to 2 1/4 pence, the upper parallel of that rising trend channel base. Ideally, we don't go back below the 200-day moving average there at 1.21 pence. Finishing off with a stock where we're always expecting significant news on the petroleum front from the South Sudan zone or elsewhere. Wildcat Petroleum, here you can see that the shares have bounced a little ahead of the AGM on Wednesday, and they've also bounced above at least on Friday, above the 50-day moving average at 0.14. Above that, we're looking for at least a retest of the Thursday resistance at 0.2 pence, and obviously if there is anything on the material on the fundamental side, much more. The for the channel there around the 0.14 level, so that is the line in the sand. Otherwise, the best case would be that we head up to 0.26, the top of the range, and top of that channel by the end of next month. Nice RSI rebound above the neutral 50 level, so maybe that is a sign that one or two people are accumulating a little bit of stock. That's it from me today. More updates tomorrow.